Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to our weekly podcast. Global equities snapped a multi-week positive streak as sentiments weakened post the US Fed Chair Powell's hawkish congressional testimony, which indicated that the central bank's fight against inflation was not over yet. The futures market is now pricing in a 3/4 probability of another US Fed hike in the upcoming July policy meeting. Major global equity indices ended lower for the week, with the MSCI World, MSCI Emerging Markets and Asia ex-Japan indices falling 2%, 3.7% and 4.1% respectively. In the US, the S&P 500 index, Nasdaq Composite and Dow Jones Industrial Average fell 1.4%, 1.7% and 1.4% respectively. Back home, Indian equities snapped a 4-week positive streak. The Nifty index came under pressure after closing at a new all-time high amid weak global cues, hawkish minutes of the RBI monetary policy meeting and profit booking by domestic investors. For the week, the Nifty index fell 0.9% but outperformed global peers and the broader markets as the Nifty mid-cap index was down 1% and the small-cap index was down 1.1% for the week. Among sectors, realty, metals and FMCG were the worst performers, recording cuts of over 1.7% for the week, while the IT was the only sector to end the week in green. The Indian fixed income market came under pressure with the Indian government bond yields rising across the curve amid hawkish minutes of the RBI's Monetary Policy Committee meeting and rising US bond yields amid hawkish US Fed's congressional testimony. The 10-year Indian government bond yields rose 4 basis points over the week to close at 7.07%, while the 3-year and 5-year Indian government bond yields rose by 5 basis points and 6 basis points respectively over the week. The INR depreciated marginally against the USD as rising US bond yields and strengthening US dollar negated the positive impact of lower oil prices and robust foreign investor inflows. For the week, the INR fell 0.1% to close at 82 per dollar. Brent crude oil fell 4.2% to close at USD 73.4 per British barrel as traders weighed the impact of a likely further policy tightening on economic growth and oil demand. Among other major notable updates for the week, the minutes of the June Monetary Policy Committee meeting released last week showed that policymakers remain wary of inflation. 5 out of the 6 decision makers voted to retain the policy stance of withdrawal of accommodation, mainly as banking system liquidity was in surplus and to align headline inflation with the 4% medium-term target. The RBI governor highlighted improving growth prospects and strong macroeconomic fundamentals in India, but also highlighted that though the near-term inflation outlook is favorable, inflation in fiscal year 2024 at 5.1% year-on-year would still be above target, and the journey towards the 4% target would likely be gradual and protracted, adding further that the job is only half done and that RBI stands ready to act if situation so warrants. The Deputy Governor also highlighted upside risks to inflation in second half of fiscal year 2024 and stated that holding the rate unchanged in this meeting should not be interpreted as interest rate cycle having peaked, but as a period of careful evaluation of decision on the extent of additional policy tightening if needed. At this point, I'll take a pause and thank you as always for listening. If you find this podcast useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.